Hey everyone, how's it going? Welcome to a new series on the YouTube channel called The Weekly Bias. So this is going to be a weekly upload going over um, a few charts and stuff. For this video, we'll go over the dollar currency index, which will be consistent throughout all of them actually. And then I've chosen E-mini S&P futures, pound dollar, and ETH. So in next week's video, I'll cover the inverse, so Nasdaq, Euro USD, and Bitcoin, and maybe an altcoin or something if you guys want. But before I get started, just wanted to say you should come over to our Twitter at TheLinesman TA, give us a follow there, and make sure you check out this Medium article right here, which is quoted in our pinned tweet from our NFT project, Very Important Panthers. This will explain everything about what we are, what we're doing. Art's pretty sick if you ask me, and I honestly believe this is all unique and not something you see everywhere. So make sure to check it out. Make sure to give us a subscribe over here on YouTube as well, and thumbs up slash comment if you like the video, as well as Twitch if you'd like to see us live stream, as we've been live streaming a few times over the past couple of weeks. Make sure to give us a follow here. So without further ado, let's get into today's video. So starting with Dixie. Um, you guys would know that we mentioned multiple times on the stream that this monthly FVG right here. Um, Let me switch over to the monthly. This one was our POI for longs for where we could expect a reversal in the Dixie. We're on stream saying that multiple times. Um, Sell side liquidity built up under this swing low that led to what? What did I just do? Okay, apologies for that. Um, there we go. We're back. That led to this big run up to the high that we've had recently. Um, and then, as you can see right here, we quickly swept it during the non-farm payroll FOMC, and then non-farm payrolls gave us a bullish dollar news, and we skyrocketed above. So um, currently, if I zoom into the daily quickly, we said on stream that if we have a weekly close above this high, I'll just mark it out quickly. This high right here, which you can see we most certainly did, that's very significant for the market structure of the dollar index, and it signals that we are now in an uptrend and we can expect higher prices over the next few weeks, which is why I've marked out the next major liquidity pool lining up with this weekly imbalance right here, and monthly imbalance as well, where there would be a lot of buy side liquidity resting above here, all the stop losses. Also, we've got these choppy highs here. But specifically for this week's weekly bias, apologies if you guys hear me sniffling or I have to blow my nose throughout the video. I'm currently a bit sick, but we grind anyways. Um, we have the high of this imbalance right here. I'll just move that up there. We have the high of this imbalance right here and this bearish weekly order block that led to actually the sweep of this low. So currently, I didn't expect us to rally so quickly. Like these two candles. I was hoping that this candle would actually turn over and come towards this volume imbalance, but it is what it is. I do believe that it'll take a lot of strength in the dollar for us to just push through this and continue seeing high prices. And we do have this over here. This is the low of the current weekly FEG that we're making right now in this candle. So I do believe that we might see another little push up into here, maybe even 50% of it. But I do believe we'll then begin to roll over and retrace a bit before seeing higher prices. So that's dollar index covered. Now on to E-mini S&P. This one's a big one. Um, if you guys want to know what ticker I'm using, it's ESH 2023, which represents the March 2023 delivery contract for E-mini S&P futures. Now, big one here, lots to talk about. First, the dealing range right now that I'm worried about. Premium Premium is above 50%, discount is below 50%. As you can see, we swept this low, and since this low has been swept, um, we've got sell side liquidity resting under here. We have not taken another weekly yet, another weekly low. So this entire parabolic curve um, just represents built up liquidity. There's not really much else. The entire movement of the S&P up here has simply been engineering liquidity. We've got the yearly open down here and the untapped yearly low right next to these lows. Don't buy into the market makers games. This is not a bull run. Um, you'll know if it was a bull run. But now that we've covered this and everything we have resting towards the downside, what's been happening up here? So as you can see, this significant swing high um, from Monday 28th of November 2022 and this significant swing high from Monday 12th of September 2022 have both been taken out, which represents a lot of buy side liquidity that's been taken, and yet the price has not really shown any sign of reversing. Weekly structure is most definitely still intact, and therefore, as of this weekly candle, we can't really. There's nothing suggesting as of Monday's trading that we will be going any lower. So the weekly imbalance that would be made on this candle has now been fully closed, so there's nothing going to be made here, which suggests to me, and the fact that this curve is still intact suggests to me that we will see higher prices. Now, if we're going higher, where could we go? There's a lot of confluence for this volume imbalance right here. As you can see, this gap that represents a volume imbalance, and it is a very sensitive area of price once we target there. So we are currently still in the range of this weekly imbalance made in August with this big down close candle. We traded up into it once, rejected, traded up into it again, rejected, and now we're here for the third time. I do believe we will begin to fully close this one out. Now, the other confluences we have, besides for the top of this imbalance within this volume imbalance, is zero point 0.5 of, or consequent encouragement of this monthly wick, which also was right at the low of this bearish order block right here. So that's a likely draw on liquidity for me. The other thing, if I quickly come down to the daily, the other Fibonacci you can see here, as you can see, I have a zero point 0.5 and a -2. So the -2 is actually going to be the standard deviation projection for this Judas swing that swept this low and this low. I mean, this low after this low was taken. The bodies of the candles, if you measure them, -2 standard deviations of that lines up right here. So that's a lot of confluence, as well as another area of liquidity here. We currently rejected off that bearish order block for now, but I do believe if we may see a movement into this daily order block or to fill this daily imbalance right here, but I do believe then we'll begin to push up. So that's kind of lining up with the Dixie analysis as maybe a day or two more of green for the Dixie and one or two more days of down for the E-mini S&P, and then we can see the Dixie put in the high of the week on Tuesday or Wednesday, and then the S&P put in the low of the week on Tuesday or Wednesday. Classic buy profile. So yeah, and then I do believe we'll begin to push up. Now that that's done, let's move on to GBPUSD. Now this one, if you guys watched last live stream, I mentioned then how weak this is. I physically cannot explain to you how weak this is in comparison to the dollar and Euro USD. So as you can see right here, this is not a trend line. This is representing a smart money technique divergence, smart money tool divergence, whatever you want to call it. It's not an indicator, but it's the only thing that can actually tell you of real accumulation of shorts on GBPUSD by smart money. So the Dixie the Dixie made a lower low from the low that was made in the 23rd of May, and Euro USD made a higher high. But as you can see, the GBP did not, which represents real accumulation of shorts, and that it is relatively weak to its inversely correlated and correlated pair. Um, this is the current daily range I'm looking at from this low to this high right here. We currently very much in a high time frame premium, which gives a lot of confluence for move back to discount. Um, let's just finish up here before we come back to down here. We traded to the upper limit of this weekly imbalance slash balance price range from all the way back here. I'll just zoom into the daily quickly, and it wasn't very much of a sweep, but this high right here has been traded through, which means that the liquidity is taken and the algorithm can then seek to reprice lower, as all of the buy side liquidity has been taken from above these highs. And you can see that with this big down close candle, we are clearly going to see lower prices. However, admittedly, it did sell off a lot more than I thought it would in terms of this candle here with non-farm payrolls. I was still waiting for short in here. I had my ask sitting in here, but unfortunately those are most certainly not going to be filled for now. In terms of the weekly bias, lining up with the Dixie moving up and then putting in the high of the week and then retracing lower, I do believe that we will see some upside this week in the British pound before we see downside continuation. So depending on how quickly we move up, we could see the move up and down this weekly candle. But otherwise, if we see a lethargic, slow grind slash chop slash sideways, yeah, this will be not too big of an up close candle, and then we can see the next reversal to the downside, maybe next week's trading. I believe we have CPI, yeah. Um, I'll just go over in the Discord towards the end of the video the economic calendar releases for this week because that's always important, especially when you're trading currencies. To the downside, we have this clear swing low right here. This I don't really know how to explain it, but this is going to get taken out. This wick will get traded through. And then after that, the weekly imbalance right here above the order block and 50% of this dealing range. So those are our premium PD arrays for targets, but to the downside, we've got on the weekly chart not really much until we get to this weekly volume imbalance. That's mainly where my focus is, because these lows, yeah, they do represent sell side liquidity, but this would be the real draw in my opinion. Um, as you can see on the daily, we've shifted structure to the downside most certainly, taking out all of these lows, and we're currently in an order block, so I do believe we should see some upside before we see continued downside. That's pretty much it for GBPUSD, and then ETH USD T. Yeah, so ETH is similar to GBPUSD. ETH is the most certainly the relatively weak pair against its correlated asset of Bitcoin. So I'm still looking at this dealing range of our 2022 big pump that we had before we. It's very interesting how different the structure is on ETH compared to Bitcoin, but we've got above 50% premium, below 50% discount. We have sell side liquidity built up under this low. We haven't actually taken out the June low from last year on ETH, whereas we have on BTC, which is quite interesting. There's simply a lot of liquidity lying under here. There's not much else, not really much else to put it like. But we've got these relative equal lows here, lots of liquidity. These equal lows here, lots of liquidity. These equal lows here, lots of liquidity, and the yearly open and the yearly low. The interesting thing about crypto is if you check the yearly candle, we don't really have a wick to the downside whatsoever. So from any zoom, you can, if you actually look at the chart, you can see that there is a wick on to the downside on all of these candles. But let me show you how much you're gonna have to zoom in to see it on this one. Now, and only then can you see the little wick to the downside. So I do believe that this is simply just a run higher just to come down. Whether that's done this year or not, I don't believe that the market makers are finished with business to the downside and that crypto is just going to go straight to the moon to all-time highs. We have a smart money technique, smart money tool divergence with Bitcoin here as BTC is traded through this high, whereas ETH has not, which represents short positions building up on ETH and relative weakness. We did take out this 1680 high, which as you guys who have watched last stream know, that was the trigger for our bias to flip short based on the price action then, and you can see we did have a nice dump from there, and we have not been able to trade back up there yet. The weekly close from last week, I was watching specifically to see if we closed above this high. It attempted to rally towards the end of the week, towards the end of the towards the weekly close, I should say, but it struggled and it didn't end up getting there. So towards the downside, we have these three untapped lows, which are once again built up liquidity that is untapped, and then we've got this big fat weekly imbalance made by this what do we call it? This out of nowhere pump. Let's just say that the cartels. If you know, you know. But anyways, in terms of this next weekly candle on ETH, it's a lot harder to read than some of the other pairs we've talked about today because this is an indecisive candle. We swept the previous week high, but did not sweep the previous week low, which is interesting, which just signals to me that there is most certainly unfinished business to the downside. I'll just jump down to the daily for a second. If you compare this sell candle right here, this down close candle to the ones we had on GBP, oops, sorry about that. The ones we had on GBP, the ones we had on, um, not really ES, that's why I was saying we could go up more, but the bullish candle we had on Dixie as well, sorry about that. The bullish candle we had on Dixie, it's not really convincing of wanting to go lower. On the lower time frames like the 4 hour, we did have a small market structure shift here, and this is my POI for shorts. If we get a setup forming in here during either the New York session today, I'll be looking out for trading then to see if we can get a move down into here. But besides for that, crypto is not really that interesting. Well, BTC and ETH aren't. So if trading shitcoins is your thing, that's probably the way to go. While the kings just do nothing. But yeah, I believe that's it for the charts for this episode. I just wanted to quickly jump into the Discord, and this is the weekly calendar we provide every week for our whitelist. Um, Macroeconomic events for this week in EST. Red is high impact news, and orange is medium impact news drivers. Um, on Monday at 10:30 p.m. EST, we have the Australian dollar and the Royal Bank of Australia's interest rate statement and their cash rate. So if you're trading any AUD pairs, watch out for that. On Tuesday, we have Powell speaking. I believe he's being interviewed by a billionaire owner of a private equity firm. So it'll be interesting to hear what he says. The market always listens, and there's guaranteed to be some volatility around. And so just be careful if you're in any positions. On Wednesday, we have FOMC member Williams speaking. The US dollar offers, the US government, sorry, are offering their 10-year bonds up for auction, and the FOMC member Waller is speaking. So just look out for these times. On Thursday, we have the pound's monetary policy report hearings, Euro, EU economic forecasts, USD unemployment claims, and the Royal Bank of Australia monetary policy statement. So, interesting week for the AUD. Also, a few foreign currency pairs there, but USD ones are mainly the ones you want to watch for if you're trading crypto and stocks. Friday, we have a big day for GBP and USD. Um, GBP as the GDP month on month, and the preliminary numbers for the GDP quarter on quarter are coming out. So watch if you're trading pound dollar there or any of the pound pairs. And then on at 10 a.m. we have the preliminary University of Michigan consumer sentiment numbers, and then the preliminary University of Michigan inflation expectations, and then to end it off for the week, the FOMC member Wallace speaks. So that's pretty much it for this week and this first episode of the Weekly Bias. So if you guys enjoyed that, make sure to give us a follow here on Twitch to catch the live streams when they happen. Give us a follow here on Twitter, and then give us a subscribe here on YouTube. We've just hit 100 subscribers, so thanks to everyone for the support. Um, Check out these videos if you'd like to see more of our content. We've got some more beginner education rolling out over the next few days. And then, yeah, cheers everyone. Till next time. Stay safe, good trading.